Okay, time now for On the Radar, when we ask an investing professional what they're looking at in today's markets. We're back again with Lenka Martinek. She's managing partner at Sustainable Market Strategies and Nordis Capital. And Lenka, you've got some thoughts on critical minerals, which have been in and out of the news fairly frequently over the past couple of years. They're becoming more important with the push to decarbonize economies around the world, and they're particularly in focus because they are bound up in the Trump administration's plan to bring a conclusion to the war in Ukraine. Ukraine getting strong-armed, many people would say, into a deal on critical minerals with the United States.
Yeah, so you're actually right. For us, we look at the sector, particularly because of the energy transition, and from a geopolitical perspective, this idea that the U.S. really has been very consistent over the last 8 to 9 years, suggesting that they want to beef up national security and really be autonomous, particularly from China. So currently, what is the state of affairs? You have basically 60% of global mineral production is in China. So anytime the U.S. can find new sources, diversify away from China in terms of critical materials and minerals, they're going to try to do that. This specific case, I'm not going to talk about the geopolitics of Ukraine, Russia. It's outside of my domain. But what I would say is, from a game-changing perspective for demand for critical minerals, this is really a sideshow. So I put this in the category of what we talked about, of flood the zone in terms of news when it comes to the materials, to the resources sector. The reality is really 3 things. First of all, we don't really know what's in Ukraine. The last time there has been a geological survey in Ukraine was sometime in the 1980s. So we think there is a lot of titanium. We think that there is a lot of graphite, but actually how accessible it is, we really don't know. So that's number one. The second one is that it takes about 15 to 20 years to build these mines. So we're talking about something, that is well beyond the scope of a Trump at Trump term 1 and potentially a Trump 2 sort of term. So the notion that this would really have an effect on the mineral outlook for those that are in the mining space today, I think is still really very much up in the air. And then the third thing, and I think this is a less appreciated piece of information. Earlier this week, Trump actually signed another executive order related to copper. And the idea about that executive order was actually to do more copper mining on U.S. soil where we have copper. And so to me, this is another indication of this idea of trying to do as much as we can with friendly nations and as much on home soil as possible. And I think the jury is really still out how we characterize, anything that's happening in the Ukraine-Russia space. So for us, this is a bit of, it's noise rather than something that really changes the outlook for producers today. Okay,
we're basically out of time, but your takeaway here for investors, I'm seeing some from your notes, is stick to the established miners, particularly those that produce copper, Rio Tinto and Teck Resources, correct?
Yeah, so that's obviously in the copper space. We're much more bullish on copper than some of the other minerals, just because we can see the usage from an industrial perspective and the electrification side. And so that's really where the view is coming from. And we like those established producers much more.
That's Lenka Martinek. She's our featured guest. Remember, she'll take questions from you at the end of our show. Still ahead, we'll take a look at Canada's gross domestic product numbers as they come in live in just a few minutes. We'll have an economist at the Business Development Bank of Canada. And our phone lines will open soon for our first call segment. Lenka Martinek will take your questions on stocks in sustainable investing. That concludes